Perfect. We are live. Mark, thank you so much for joining me. This was something that I've been wanting to do for quite some time now, with the community, for the community. And the purpose of this call specifically was really because I was getting a lot of questions from different community members, various community members, asking, how I'm piecing these different things together. They see the announcements coming through, but they're not really getting the bigger vision. What is it I'm excited about? What is it I'm looking forward to? How do I see, Bancor's position currently? And after, scheduling this or talking to you about organizing this, you had volunteered to join me, which I'm grateful for, so thank you. And also gave the community a form to fill out if they had any additional questions. I wasn't really sure what to expect, what would come of it. But we got a good number of really solid questions. So I know the purpose of the call was to really share my vision, but maybe together you and I can share ours by going through these questions that they've submitted. Cool. Okay, I am going to just start it right off then.
Sure.
Okay, first question we got was, can you explain how strategy? Okay, so I put this one first and foremost because I know the purpose of this call was kind of the bigger vision, but this was a Carbon DeFi specific question and I didn't want to just ignore it. This was a community member asking for clarity on a discussion that was happening in the Carbon DeFi Telegram. So can you explain how strategy execution works on Carbon DeFi, specifically why the displayed price on the app isn't what determines whether an order fills and what actually triggers a trade?
Yeah, sure. I can try and address that. So the price information that appears on the app, I think we collect from either CoinGecko or CoinMarketCap. I can't remember which, but we've sourced price data from both of those previously. I'm not sure which one we're still sourcing it from. And this is really, I think it serves a useful function because people who show up at the app, especially if they're trying to denote their trade value in exotic token pairs, like one meme token versus another meme token, for example, rather than asking the user to, basically go to CoinMarketCap themselves or CoinGecko themselves and look up the two token prices and then make sure that they do the division, around the right way in order to get the correct quote and base asset price format. I think it makes sense to do a lot of that for the user and show them what the answer would be had they performed that calculation manually using the price that we're getting from CoinMarketCap or something like that. But it's important to recognize that CoinMarketCap doesn't really know what the true price of things are. No one can know that. It's just, however that price data is being aggregated and approximated and averaged and so on results in that one number. But in truth, nothing trades at a specific price like that. And it's impossible. Once you start averaging and aggregating data together, it becomes more and more useless. So the confidence bands around the price data that you get from any aggregated data source are usually very, very wide. And this maybe shouldn't be too surprising. And I know I use this example a lot, but I think I'm going to stick with it. Is something like a PlayStation 5. If you ask someone what is the price of a PlayStation 5, they might say, well, Walmart is selling it for this amount, and Target is selling it for this amount, and Electronics Boutique is selling it for this amount, and so on. And you can start to average those prices together if you like, and kind of work out what the aggregated price of a PlayStation 5 is. But note that after you take that average, none of the PlayStations that you could buy from any of those sources sell at that price, right? Like the price that you get is the price that you cannot buy a PlayStation for, even though it is the aggregated price, which is, an interesting realization. The other point is that just because let's say that someone everywhere, right? Like, let's say that Target, Walmart, Electronics Boutique, all of these vendors for PlayStation 5s actually do agree what the cost of a PlayStation 5 should be. Let's say $500 or something. I've got no idea what a PlayStation 5 is worth. Let's say it's $500. And so that means that there actually is one price for a PlayStation 5. So you can aggregate it, average it, whatever you like, and you're still going to get exactly $500. And so when someone asks you, what's the price of a PlayStation 5, you can tell them with 100% certainty that the price is $500. And then their response is, well, I've got a PlayStation 5. Why hasn't it sold yet? And this is like an important point. Just because you know what the price is doesn't mean that you know that someone's going to buy it, right? Like if the price of all of this PlayStation 5 inventory is exactly $500, imagine then if Costco decides to undercut the competition and says, we're going to sell all of our PlayStation 5s for $450, right? $50 discount compared to the true market price of a PlayStation 5. Doesn't mean that every single one of their PlayStation 5s is going to sell in the next second or even the next week or the next month, right? These are normal market mechanics. At the end of the day, the price is utterly meaningless. The only thing that really matters is the desire of the participants in the market to buy what it is you're selling. And Carbon DeFi doesn't buy assets from you. There needs to be someone somewhere who wants to trade with you at the price that you have quoted. And so even if you are quoting a price that agrees with where the market should be, that doesn't guarantee that there is going to be sufficient buying interest for people to come in and fill your order. If sellers are overwhelming the demand, which is often referred to as a sell wall, this means that there just isn't enough interest in buying whatever those tokens are to effectively fill an order. And that's not Carbon DeFi's fault. It's not your fault for offering the wrong price. It's not CoinGecko's fault for quoting the wrong price. It's just that the market has no obligation to buy what you're selling. And that's an unfortunate reality of all markets. Now, what you could do in that situation is decide to do what I proposed Costco would do with their PlayStation 5 inventory and start offering lower prices, right? And this is in a sort of an act of desperation to try and find more customers. And this is what causes prices to decrease. And it's not just your tokens on Carbon DeFi that this happens with. This is why the Bitcoin price goes down, because people who are offering prices are hoping to sell Bitcoin at, let's say, $120,000. But when they put it there and no one buys it, they get worried. And so they start offering prices at 115, 110, 100, 95, and so on. This is what brings the price of everything down. So even if you know exactly what the price of Bitcoin is, and Bitcoin is an extremely liquid asset, you might be someone who is market making with, tens of millions of dollars in Bitcoin. And if there isn't tens of millions of dollars of open interest in trading with you at a specific price point, you might bring your prices down. And similarly, if there's an overwhelming amount of interest, you might put your prices up, right? Which is what causes the price of Bitcoin to rise. So these are normal market mechanics. These aren't flaws in design or necessarily execution problems. It's really, in the overwhelming majority of cases, is just the market dynamics playing out the way that they should and always have. There are some exceptions to this. So sometimes there will be like a very exotic token and one that the backend infrastructure for the Fastlane hasn't detected any liquidity for elsewhere. And maybe there's a bespoke DEX or something that hasn't quite been integrated yet, and so on. So there are these fringe cases, whereas people are offering tokens to a market where that market is unable to discover those tokens. But these are really, like, very, very rare, especially now. Back in the beginning of Carbon DeFi, I'd say that was more frequent. But the infrastructure is, is pretty battle tested now. And so, the instances of that specific problem surfacing is approaching zero over time.
Mark, really fast before I move on, I do want to make sure we have time for all of the community questions. I'm listening to what you're saying, we're talking about how there needs to be two sides to every trade, right? There's somebody who's making the market, there's somebody who's taking it. You mentioned the ARB fast lane towards the end, but did you mention that this was one of the reasons that the ARB fast lane was created in the first place? Like to act as the de facto taker of carbon DeFi. Okay,
Well,
so
sort of.
go ahead. Sort of.
Yeah, the ARB fast lane is to make what could be a bad assumption a better assumption, and this is true of all exchange infrastructure, particularly on a blockchain, but I would say just all exchange infrastructure anyway. Doesn't matter if it's on a blockchain or not. And in centralized venues, the way that they have sort of decided to deal with order flow and the sort of chaotic asynchronous nature of markets is to sort of separate the bid and quote prices from order clearing and that kind of thing. And so there are specific ways that you can introduce into it, into a marketplace, ways that organize and streamline the buying and selling of, tokens or securities or commodities. Doesn't really matter. On a blockchain, because of the lack of centralization, means it's very difficult to organize that kind of thing. And so there needs to be a slightly different approach to the way that order flow is organized. One of the ways that this happens at various different rungs within the blockchain. You could argue, for example, if you're on a layer 2, the sequencer is the first level of sort of artificial organization that's put on order flow. But then after that, you've got all of the different places that a user might be looking to buy and sell assets at. Meaning all of the different liquidity pools and also the different liquidity protocols that exist on that chain. And so the ARB Fastlane is a way of making the assumption that if someone is offering a price and that someone wants to buy that thing that someone is selling, that in an efficient market, they should take the lowest available price. Right, like they should try to buy the thing that they want, as much of it as they can for whatever their budget is, whatever their trade value is. And that's obviously not always true. A lot of people will prefer to trade via whatever DEX front end they like the most, for example, which usually means they get a much worse price. And so in those kinds of situations, someone might be justifiably annoyed that their tokens weren't bought instead of somebody else's. This would be like in that Walmart Costco scenario. If Costco drops the prices of their PlayStations and Walmart doesn't, if someone goes and buys a PlayStation from Walmart, they're paying $50 too much. And is it justifiable for for Costco to go, well, that's unfair. I was selling the same product to someone else. Why didn't my order get filled? Why didn't they buy a PlayStation from me instead of Walmart? And it always comes down to that the user is usually relatively random in their decision making. They do very little work to try and get the best price, and they just do whatever it is that they're going to do. And so if left unto itself, the people that are actually taking prices generally don't care what price they get. But the people who are making those markets, I think, do have a right to be annoyed when they were offering a more competitive price and it wasn't being taken. So the Fastlane looks to basically let those users who are making a mistake make that mistake, because we can't interfere with their decision making. But if it opens a back-runnable arbitrage opportunity that would allow someone on Carbon to be filled, then it will do that. And so this approximates, right? It makes the assumption that users will always take the first cheapest price available a better assumption, and so makes the system behave like it is actually in a rational market.
We're seeing a bunch of comments over here. I don't know if you're seeing them, but it's nice to hear, to see the comments that are being made in the chat while you are answering this question. So I appreciate it. I think what I really just wanted to say about the ARB fast lane was that there may not be a taker who is trading against Carbon DeFi on the front end, right? If they go to a different DEX on a network that Carbon DeFi is deployed on, chances are the ARB fast lane has that DEX integrated. So even if they trade on a different DEX, the ARB fast lane will see that price discrepancy, will want to create a sort of equilibrium and hopefully use that liquidity then to fill your order as well. So the ARB fast lane fills in, as this sort of taker on Carbon DeFi on the system. Okay, we are going to move on to question 2 because we are almost 20 minutes in and I have, I think, 19 more questions for us, Mark. So let's go to question 2. What metrics does the team use internally to judge whether Bancor is succeeding? TVL, volume, unique users, partnerships, etc. I will let you answer.
Yeah, I mean, I don't think that it should be surprising to find out that things like TVL, volume, the number of BNT tokens that are burned via the vortex, things like unique users, transaction count, gas consumption. These are the things that are indicative of a product that is finding, let's say, organic use or is becoming entrenched in the blockchain that it's deployed on. Whereas, if the TVL is 0 and there's no transactions and you haven't spent any gas, then you've basically just deployed a contract that isn't in use, and so that would be an indication that that specific deployment is not succeeding. So yeah, I don't think it's there's nothing too surprising, I think, about my answer here.
Okay, I think there is though, because you mentioned gas consumption, and that was the next question. I thought you might say something along those lines. This was something else that was submitted. The ARB Fastlane was just ranked #1 for gas consumption on TAC. Who is this important to and why? Like, they're basically saying, like, I don't know, like, why do I care that it's #1 for gas consumption on TAC? Is it for the community?
Okay.
Is it for Bancor? Is it for TAC? Why is this important?
So there's a couple of different ways you can break it down. Maybe the most obvious is that to a blockchain, the ability of the applications that are deployed there to incentivize, I guess, encourage users to part with gas is really the way that those blockchains are monetized, right? It's the same way that Ethereum is monetized. So blockchains in general want applications that drive a lot of gas use. And it's twofold there. I said that this is the way that the blockchains are monetized, and that's certainly true. But it's also an indication that those applications are the things that users are spending most of their time on. So you could think of it, for example, if you had the App Store, right, for Apple products. Why do you think they track the number of downloads, right? Because it's not like the number of downloads is just costing Apple money, right? Because that's overhead and stuff that they need to support on their end with respect to cloud computing resources and everything else. The reason they do it is because the things that are getting a lot of downloads are the things that are causing a lot of people to come to the App Store and use it, right? And so whatever monetization Apple uses for its App Store, and I don't use Apple products, so I'm not sure what that is, but it is the things that get downloaded a lot that are going to be the things that are the biggest revenue drivers somehow for Apple, or the popularity of the App Store, or brand recognition, or however they are choosing to measure the success of that service that Apple is selling. It's the same for blockchains. And so on the gas consumption side, when you see that Carbon DeFi and ARB Fastlane have been top gas consumers, you can think of it as the most downloaded app on the App Store, right? And so if you were Apple, paying attention to what are the things that are causing your product to be successful or not successful, the things that you would credit with your success are the things that are burning the most, that are burning the most gas, that are causing the highest gas consumption. That's your number of likes, that's your, your number of downloads, but in a way that isn't socially engineered, right? The gas consumption of the blockchain is like an actual metric of actual use and something that can't be faked by, having 400,000 followers on Twitter or something. It's a more, it's a much more realistic measure for what is important and what is driving adoption of a blockchain than anything else. That's the number one metric. And so for Bancor, it matters to us because it matters to them, right?
Perfect. That was a great explanation. I appreciate that. Thank you. Okay, next. How would you pitch Bancor's value to institutional clients?
So that's a very complex question because institutional clients aren't like a single category of thing, right? I think in DeFi, then people naively think that institutions are going to show up and use DeFi applications the same way that they are. But there are no DeFi institutional users who want to buy Ethereum from a DEX, right? Or want to, trade one token for another token or borrow against the token on Aave. That's just not what institutions are interested in doing. And so, the product side of things, like, or the things that DeFi users think are interesting is not at all interesting to institutions. Institutions generally have a much more specific goal in mind. And it could be that, for example, they want to create a special sort of ring-fenced version of a boutique exchange that they want to run by themselves and only allow 2 or 3 of their partners to use with them. The kinds of things that get set up outside of DeFi, they want to run in DeFi using a blockchain for convenience and security. But yeah, it's not like institutions are going to show up and provide liquidity on Uniswap or something like that. That's just not, that will never happen. It's a very different sort of thing. And so when they say, how would I pitch value, Bancor's value to institutional clients, there is no elevator pitch. It would be naive to even think that you should come up with one, that's suitable preparation. It's not. The only way that you can prepare for these kinds of conversations is to understand what the regulatory landscape looks like in different jurisdictions, because it's not the same everywhere in the world, and then listen to what the institutional client is proposing, and then after that it becomes more of a discussion. So there's no sort of, you can't package things up and in such a way that it's appealing to every possible demographic within the institutional space. It's much more of a case by case sort of basis. I think if we had to point to one in particular recently, this would be Aureus, who we met through, I think we met them in Thailand at the Cody event.
Mm-hmm.
See Blockchain Week, right prior to the, despite it being canceled by the
It was a great event still, though, and I was really happy to meet Aureus. They were fantastic. I wanted to mention that for the community member who submitted this question. I highly, highly, highly suggest rewatching that call that we had with Aureus, because they are a licensee, or they leaked it at the end, so I'm not saying any secrets. But yeah, they will be, deploying their own version of Carbon DeFi, the contracts powering Carbon DeFi, and they are working directly with institutional clients. And so to hear how they pitch that, not even necessarily how they pitch that, but how Carbon DeFi more so serves as a solution to what was stopping these institutions from coming on chain. That's really what it comes down to. And I was kind of smiling when you were saying that no institution is going to come on chain and do, $50 million on Uniswap or something like that. It's not even necessarily you saying this. You can say it all you want, but Oliver said this on our call as well.
Yeah.
I think, and Eve, I think, said it also. This was a big blocker for them.
And there's two sides to that coin, because there are, mercenary capital has become something of a profession since, things like token incentives and things caught on. But I know a lot of these firms that specialize in, like, literally specialize in liquidity mining, essentially, putting X amount of capital in protocols all over the place, so long as there's a liquidity mining campaign running, and constantly dumping those liquidity mining tokens while they're doing it, usually for stables. And as soon as the liquidity mining runs out, they withdraw from there and move to the next thing. So they have, a spreadsheet that has a look at where the highest returns are, and they're constantly cycling that capital around. Now, even in the, like, if we were to call that an institution, which to some extent it is, it's even within those circles, they're trying to work out what their long-term business plan is, because they recognize that the incentive campaigns that they've been, farming for the last 5 years is not sustainable and is diminishing, right? Like in 2020, this was an extremely profitable way to spend money. In 2025, much less so, right? We've gone from something like, you can expect, to 5x your money in a year, with all of the incentives, hype, and so on. Whereas today, we're down to about 8%. And I think that's we're very quickly going to end up with, liquidity mining rewards that are not competing with, normal, high interest, T-bills type stuff. So it's, there are institutional clients who do provide liquidity, but it's not to provide liquidity, right? They're basically, it's basically renting liquidity. It's not, people aren't using the protocol for its own purpose. They're trying to do it for other reasons.
All right, Mark, we are going to keep going. Thank you. And thank you to the community members also for submitting these questions. Let's see. Okay, out of all of Bancor's current products, which do you see as the most valuable, and how do you frame the mutual benefits for both sides? I know my answer. You want to go first?
Well, what's your answer?
I do see them as individual products, but I see them as more of a collection of offerings, right? It's more of that suite. Like, we work with blockchains quite often. Bancor is working with blockchains. Carbon DeFi and the Art Fast Lane really complement each other so well that I don't necessarily see one over the other. I see the value and the power of them combined to form this sort of, I don't want to say super product, but, like, lack of a better word, right? Like, the Art Fast Lane is fantastic on blockchains. It's wonderful, and it will arbitrage dexes and things like that. But then when you put Carbon DeFi into the mix and see what it does there, I think that it's just elevated what the Art Fast Lane is able to do. And with Carbon DeFi, it's the same, right? Like, we always say it's not an AMM, it's, not an order book, it's this combination of the two. And it's true, because you can do everything you could do on an AMM, and then you can do everything that an AMM just cannot natively do. It's just the facts, right? Because of what Bancor has previously invented. And then when you throw the Art Fast Lane into that, it just elevates that so much more. So for me, I don't know if it's necessarily a specific product. I really think it's just the extent of the integration between the two of them. Of course, I also see, that also goes to liquidity providers. I see Carbon DeFi and the Art Fast Lane as a product, the combination as a product for LPs, for traders, for token projects, for blockchains, and I really think that the two of them can serve all of the above. But you go ahead. I didn't even mention the Vortex, and that was probably Governor's most valuable, I would say, right?
Yeah, I think most valuable is a loaded term. I think that you know each one of these things that we've done kind of becomes useless without the other things, right? Like I think like early on in the design of carbon, we realized that the assumption that people would, trade on stuff that people are reporting there, if the price is better than what they can get elsewhere, is a bad assumption. And so carbon becomes less valuable if you don't have a solver system like the ARB fast lane to complement it. And then similarly, without the markup paradigm, or what we call the protocol fee in carbon, the vortex design, which, I think people often forget, how I mean, I don't want to say how clever, but the vortex is a standalone thing. Like, it solves a very specific issue that was very difficult, right, for us. Like, to imagine a problem where you have tokens that you don't necessarily know what they are or what they're worth, and being able to consolidate that value into something like ETH or BNT or whatever. Like, it's a difficult problem, and one that you want to solve without having to allude to something like an Oracle or a Keeper or anything else. And so to have that system be completely standalone without any dependency on anything else, I think is very special. But without things generating fees, it also becomes useless. So, like, to say that one of these things is more valuable than the rest, I think is kind of missing the point. They kind of come together. They each address the weaknesses of each other, so to speak. Now, that doesn't mean that they don't have standalone value. Obviously, especially things like the vortex and the ARB fast lane can exist without carbon, but you still need a reason for them to be there. So, for example, for the ARB fast lane, if your blockchain has a very large number of DEXs deployed across it, and that liquidity is extremely disconnected or fragmented, is usually how people like to refer to it. And then the ARB fast lane basically defragments it without having to consolidate liquidity into a single protocol or something like that. So useful by itself. But to say that, yeah, one of them is more valuable than the others, I think, like, I understand where the question is coming from, but I just don't think about these things in those kinds of terms.
Agree completely. Okay, let's see. Okay, somebody actually commented, Bancor products support each other, making ecosystems, not just products. Like that comment. Okay, so this goes back to the institutions quickly. Mark always said it's not about retail, but about institutions and businesses starting to use DeFi. How far are we in seeing carbon being used by institutions and businesses? I did share the Medium blog that I wrote following the call with Aureus. This was about RWAs and regulation and what their progress was, working directly with institutions. I think a lot of that just came with some clarity that the industry has received in certain areas, certain places, right? There are some clips in there as well, if anybody wanted to check out that link. But Mark, maybe you could speak a little bit more closely to it from the Bancor side, if you have any insights for us.
It's still early days. I think people feel like somehow the controversy surrounding DeFi is over because Donald Trump was elected. And to some extent, that's true. Like, the expectation was that agencies like the SEC and like the FDIC would, kind of have their teeth pulled out by the Trump administration. And that has been true. And the SEC has backed off. And it looks like there is absolutely no will anymore within the financial regulators inside the United States to come after projects simply because they are operating on a blockchain or using cryptocurrency, which in general is good. It's not good everywhere, but I'd say, like, on balance, the the industry has benefited a huge amount because of the the hurdles being taken away that I think were artificially put there during Project Bottleneck or whatever it was called. Was it Choke Point? Project Choke Point. So, but that was still relatively recent, I think, from in the grand scheme of things. I think if you've been in cryptocurrency and blockchains for a little while, you sort of get used to this really breakneck pace that the industry moves at. That really isn't a good reflection of how quickly things happen in, like, air quotes, the real world. So, after a big regulatory change, like the one that we saw during the Trump administration, you might imagine that there will be some people that are willing to wait to see if the next administration changes its mind, right? Like those are the kinds of, that's the kind of caution that you need to think of, especially with a paradigm change like the one that blockchain represents. There is a lot of money that is waiting to see if this is for real or if this is just like a flash in the pan before back to business as usual, meaning, all of these regulatory agencies are coming after everyone again. So yeah, it's too soon to tell. And remember, I do say that, and you're right, like the way that this question is phrased is, I think, accurate in terms of my overall worldview when it comes to cryptocurrency and DeFi. But it's, it doesn't guarantee that it's going to happen. I have the conviction that it will, and that you need to, it's a long, slow game to play. And if you play it well, then I think, luck favors the prepared. But yeah, it's not something that we should necessarily take for granted either.
Awesome. Thank you. We have quite a few, so I'm going to kind of try to run through these while still giving our best answers, right? So I don't want to leave anyone out. Okay. How does Bancor's moat evolve over time? Is it centered more on technology, tokenomics, or community trust?
Tokenomics and community
I'm going
trust.
Technology. Sorry, go ahead.
Tokenomics and community trust are more cultural memetics than anything else. The only real moat that you have at all is technology and the intellectual property surrounding the technology that you've created. And that's, that's not just true of DeFi and cryptocurrency. I think that's true of every company in any industry.
Okay, so this is not a follow-up. This was a different submission, but how do you respond to, you're talking about intellectual property? How do you respond to critics who say Bancor's licensing clashes with DeFi's open source ethos? We had a call on open source. This was one of our debates at one point on one of the blockchain banters.
I'm a capitalist, right? So I don't like open source. I like source available, which I think is a nomenclature that I've only just learned about recently. The source available means that you can see, the code and what it does and that sort of thing, but it doesn't give you the, it doesn't invite you to use it and start your own business with it. I think in terms of open source stuff, we should, and this assertion that is DeFi's ethos or blockchain's ethos, I don't think it is. I think the people who want to steal good ideas are telling you that is the status quo in DeFi, right? It's the people who have lots of capital and no good ideas that want things to be open source because they can wait and see what looks interesting and then just take it and use their enormous political and financial resources to rewrite history and make it seem like they were the geniuses that that brought something into the world, and that they have the that they want to establish their brand as being the quintessential originator, progenitor of whatever this new paradigm is. And we've seen that again and again, right? That happens a lot in cryptocurrency and DeFi. I've seen, for example, things like like hooks get rebranded as belonging to a specific project. I've seen, specific bonding curves, being, rebranded and reestablished as belonging to certain projects. Like it, and I come from sort of a more academic context, in a field like pharmaceuticals, where intellectual property is kind of everything. Because without intellectual property, if you invent a cure to cancer or something, you have a reasonable expectation to be rewarded for that discovery. But without intellectual property protecting you from it, Johnson & Johnson are just going to walk all over you, right? Or AstraZeneca is just going to walk all over you. It's the same in DeFi, cryptocurrency, and blockchains. And so just as Johnson & Johnson and AstraZeneca and Pfizer and everyone else would prefer that there's no such thing as patenting, because they can easily just destroy their competition every time their competition has a good idea. I think those who would be the Johnson & Johnson and Pfizer and AstraZeneca and so on of cryptocurrency would also prefer that intellectual property doesn't matter here as well, for the same reasons. So no, I don't think it's a part of DeFi's ethos at all. I don't think it's a part of the blockchain ethos at all. I think that this is made up rhetoric peddled by people who mean to steal good ideas.
It's kind of funny too, because when you talk about DeFi, like DeFi's ethos, like decentralization, I don't think people care anymore if the blockchain they're using is actually decentralized, or what goes into a lot of these different protocols that they're using, or
even more than that.
Like it's kind of like the industry picks and chooses depending on what like they want, right? Or what suits them is what I'm seeing more of.
Or even more than that. Like people say Web3, like the whole idea behind Web3 is ownership, right? Yeah. But suddenly when you own something that's actually valuable, it's like, no, that belongs to everyone. Like everyone flips from being a capitalist to a hardcore communist, like in a second, as soon as intellectual property is raised. And I just don't understand the double standard.
Yeah. All right. That was a good one. Let's see. Looking back 3 years ago when Carbon was born, what would you say has been a big success since launch?
Yeah, so I think there's a couple of things that I can point to. So the first one is that with things like the Outpost, like we hadn't really done anything like that before. The project before, so from 2017 to 2022, was really about building an app, and the smart contract infrastructure that it implies. But we really we were never really running bots or anything like that. Like that was a brand new sort of barrier that we had to break through as an organization. And I think for any company that is transitioning into doing something new, it can be frightening that you feel like you're unequipped for these things. But I felt at the time, and still feel today, that the developers that we have are really worth their mettle, and I've had an opportunity to prove it here. And so pivoting into something where we actually need constant sort of 24/7 bot operations running on, and remember, this isn't just one blockchain, this is several, and all of the challenges that comes with that. And even then, like, I don't think that we anticipated how difficult some of that would be for new blockchains that aren't observing, typical blockchain standards or don't have an RPC provider, and just how inconvenient, I think, interacting with a new blockchain can be at that scale. So I think it has been a huge success to show that, even just to ourselves, that we can do that if we want to, and that potentially we could scale something like that up and generalize those kinds of products if we wanted to, which is an interesting idea. I also think that at the time that we were sort of formulating what the business model would be, that there would be people interested in licensing things, and that these products could be could be sellable in and of themselves, right? That we're not monetizing necessarily the use of these products by retail users, but more the product itself would be something licensable that you can sell to another company. I think has also proved its worth, because we really didn't know if that was going to fly at all, and it turns out it was actually very well received. So I think if I had to point to two sort of big successes, I think that I would point to those.
Thank you, Mark. I'm going to keep going through here. Okay, so kind of on the flip side, right? What did you expect to happen since the launch of Carbon DeFi, but has not happened so far?
Yeah. I think.
I would say the
Excuse
industry
me.
kind of more maturing. Go ahead. You want to grab some water?
Yeah, give me a sec. I'll be right back.
Go for it. I think if I had to answer this one, I would say the industry maturing past, where we really were maybe 3 years ago since Carbon DeFi launched. I would have expected to see more users wanting to understand kind of these basic DeFi, I guess, different sorts of activity, different sorts of actions that you can take. I don't necessarily see a lot of them wanting to understand how they can prevent themselves from becoming victims to sandwich attacks, or really wanting to understand what sandwich attacks are. I see some that are, but I would have expected more to want to avoid falling victim to these sorts of things and wanting to understand that flip from taker to maker and what they are really capable of achieving by using a product like Carbon DeFi. Mark, go ahead. You want to jump in? I don't know if you heard me at all.
No, I didn't. But
That's okay. Give yours.
I think so. Carbon DeFi launched really at the very bottom of the last bear market, or moving into the bottom of the last bear market. And during that time, I remember paying attention to like blockchain adoption statistics, or statistics that I actually trust. And it looked very much like, the number of actual humans using blockchains was in a steep decline during that period. And I thought back then that this was like a symptom of the bear market, and that eventually when things turn around and Bitcoin's making new all-time highs and things, that those blockchains, user adoption statistics would be picking up. That hasn't happened. We've actually been in permanent decline since then. Like there are fewer people today using blockchains than there were in 2020, and it's continued. And the trend is not slowing down. It just keeps going down. That's unexpected. Like that really does strike me as strange. I think that it points to a couple of different things. One is that it could be that there are like blockchain users who just think they're using a blockchain, but they're actually using some like wrapper service or something. Like a lot of people who use the Coinbase web application, not base the blockchain, but just interact with the Coinbase website, identify themselves as blockchain users, thinking that what they're doing when they're trading Bitcoin, for example, on Coinbase is, using a blockchain. I think there's probably a lot of things like that, where, applications that you can buy or download from the App Store or via the Android version of that, Google Play or whatever, sort of masquerade as being blockchain-centric products, but actually have nothing to do with the blockchain, other than the fact that cryptocurrency is somehow involved. And I think, this generalizes to other things. Like, I think with all of the Bitcoin ETFs and things like that, and a lot of the other stuff that people point to as being, again, heavy air quotes, but institutional adoption of Bitcoin, is actually doing everything in its power to avoid using Bitcoin, the blockchain. They prefer to just like write down, how much Bitcoin they have in like a, in a traditional sort of SQL style trading database, and just trade that rather than actually send each other Bitcoin on the blockchain, that kind of thing. So yeah, all of that I think is very surprising. I wasn't expecting that when we launched Carbon DeFi. And there's, I think it's important to be aware of that. I think there's a lot of wish thinking and a lot of, let's say, I don't know, I kind of want to call it paranoid optimism in DeFi and blockchains more generally, where people see the same things that I am and would rather ignore it, right? Or say that, oh, that data is contaminated, or is unreliable for this, that, and the other reason, because they want it to not be true. But I think the more pragmatic approach is to acknowledge that it could be true, or that it might be true, or that it's probably true, and then work out what that means for the blockchain and DeFi industries. Because it could be that the future of blockchains is not really something that you're expecting humans to interact with very frequently, or at least that human participants have demonstrated that they don't really like using these kinds of products. But on the flip side, robots love using them, and in many ways, the robots are sort of the ideal customer. They don't use, they don't use a UI. They don't generally have any, any issues surrounding, making decisions or whatever. They read exclusively from the smart contracts and so on. And I also said, I think recently, that even with the humans that use blockchains, even though they are the diminishing minority, in the AI-powered world, it's unlikely that for much longer individual users will tolerate being shown one user interface that's designed for like every user. You could imagine, maybe not very far from now, that there will be a plugin, for your browser that will have, Google's latest AI, or ChatGPT's latest AI, or OpenAI's, whatever, or Claude, that knows what kinds of user interfaces you like seeing, and will, from the SDK, and that will just show you exactly the user interface that you want. And I think that and in a way, even in that paradigm, you're still building a product for the AI. The user who's using the AI doesn't really, it doesn't really affect your decision making at all. You're really going to be optimizing things for interaction with robots. And
Mark,
so I think
really quickly. Oh, go ahead. Finish your thought. I'm so sorry.
No, that's okay. So just saying that, in terms of what's happened since the launch of DeFi, or what I was expecting to happen that didn't happen, definitely was the lack of human interest in blockchains. And similarly, the overwhelming interest from robots, right, is like, it's much, much higher than the human interest ever was. And that's, it's surprising, and I'm not entirely sure what to do with this information, but I'm not rejecting it. I'm trying to work out what to do with it.
Thank you. Do you have a hard stop at the top of the hour?
No.
Okay, so we can continue, because I hate to rush you, but we do still have quite a few questions, and I want...
That's fine. I can keep going.
Okay, thank you. Where did it go? Here I am. Okay, so this is interesting, because we're talking about how there's a lack of human users, right, or human interest, and kind of acting accordingly to what it is that you're seeing and your willingness to accept it for what it is, right? There's a lot of bots right now. So maybe this is how you see the, Bancor's role evolving, but how do you, or how does Bancor see its role evolving in the broader DeFi landscape over the next 12 to 24 months?
No, I mean, I think that the next 12 to 24 months in terms of our role doesn't change. We're still a infrastructure provider. We're still
Do you
an
think that it's
infrastructure provider.
changed? Let me ask you a quick question, really fast, because you said you don't see it changing. But have you always considered Bancor to be an infrastructure provider? Because most see Bancor as an AMM. So it has changed since the AMM, and it has since become an infrastructure provider. So let's clarify for the community a little bit. First, how you see Bancor's role now, currently, and then if you see it evolving in the next 12 to 24 months, and if so, how. So let's start with the now.
Okay, so yeah, I think Bancor's trajectory. So no, let's not start with now. Let's just start with just to take it from beginning to end. I think the transition. So first of all, let's acknowledge that I haven't led the project forever. I've been leading it since 2022, and before then, the original Bancor founders were leading it, and they have a specific specialization in kind of mass market consumer applications, right? Things like Meta Cafe and other, social media style applications that were designed to access as large a number of people as possible. And monetization probably through things like advertisements and so on. So think Facebook, think YouTube, those kinds of user applications is what they were specifically interested in. And quite ironically, the person who invented the constant product formula, the Bancor formula, doesn't even like finance, really, or it doesn't like the financial, I guess, details of running these kinds of things. Obviously, he's interested in finance and is one of the very early adopters of Bitcoin and so on. But yeah, running a financial product is not something that he I think was very interested in doing. So yeah, that's Bancor original. And whereas I am a lot more, let's say, introverted, I don't want to try and please billions of users. This is not something that I find very interesting. I'm a much more sort of technological, driven sort of person. So the kinds of businesses that I am interested in are those that provide technology to other businesses, right? Like Brooker provides MRI machines to hospitals, and it's the hospital's job to find people to get in the MRI machine, right? The people that build the MRI machine don't sell MRI machines to patients. That's the hospital's job, and the hospital buys the MRI machine from the people that make it. That's much more what I would like to do. Something more like ARM, right? Where the technology is designed and described by someone and manufactured by someone else, and then sold to end users by someone else after that. I think that these are the businesses that I understand much better, and is sort of the direction that I wanted to take Bancor in. There is another parallel that I think might make sense to more people, but it's kind of, I don't know, it might be kind of a counterexample or whatever, but it doesn't really matter. There was a gaming company called Valve that was that was well known for making a handful of games that were very popular, things like Half-Life and Half-Life 2, Portal, and things like Team Fortress, this kind of thing. So they had a decent collection of games that were popular enough to make them, let's say, a very successful software company. But then rather than choose to keep making games, they instead developed something called Steam, which is an online distribution service for games. And so rather than trying to sell games to end users, what they instead started doing was selling distribution to other game developers. And that, I think, is the winning business model. That's the one where you're not constantly chasing, hype cycle after hype cycle, trying to remain relevant. The games that might have been very popular back in, 2005 or whatever, whenever Valve was making games that people actually enjoyed, might not appeal to Gen Z or something like that. They want to play sort of Candy Crush or Pokemon or whatever. I think that trying to remain abreast of those kinds of cultural changes is very stressful when you are a software company that's developing video games that only last for a short period of time. And so transitioning to a digital distribution service where your relevance can be maintained for a long period of time and can also focus your attention on doing that well and iterating that one thing was clever. And I think that that's where I would like to take Bancor, because things like the constant product AMM formula have proved to be highly consumable by other companies. And so I don't see our customers as being the users of AMMs. I see our customers as being those who use the Bancor formula in their own products. So that's where I see us going. B2B. I would like to focus very much on the B2B side of things.
Awesome. Thank you, Mark. Would building a Bancor chain, whether standalone or as an L2, be on the long-term roadmap? I know we don't talk roadmap, but is it anywhere, in your realm, in your thoughts? And how would the team evaluate if and when that makes sense for the ecosystem?
No. So some will know this already, but in 2020, which was when there were no layer 2s, right? This is before Arbitrum, before Optimism, probably before Polygon. Bancor was thinking about launching its own blockchain. And yeah, we hired some very gifted software developers to, let's say, do the cost benefit analysis and really sort of sketch this thing out. And that effort closed very quickly with the conclusion that it doesn't make sense to make your own blockchain. And the cost benefit analysis has only got worse over time. So it's not like if we were to return to it now, that it would look any better. And if you talk to a lot of people who are in that business now of competing, their own layer 2 against everyone else's layer 2s, they can tell you just how stressful it is. And so, no, I really don't see it as being, I don't think it would make any strategic sense. I think if we were to build and launch our own blockchain, it would be for, for reasons other than, business motivated. And so, no, it's not on my mind at all. While I'm leading the project, we'll never be launching a blockchain.
Okay, well, there we have that. Okay. Carbon's progress has been great to see. However, the majority of fees generated are still from the AMMs. Are there plans to continue scaling the volume on Carbon or increase fee generation elsewhere? Now, fees, generally people hear fees, right? So for anybody who's unaware and they think fees, this is what the LPs earn from providing liquidity and things of that sort, right? But all of the fees that takers pay when interacting with Carbon DeFi, that is actually going to the protocol, right? So just to make that distinction really quickly. Go ahead, Mark.
Yeah, I mean, so we always plan to scale and grow things. There's no recipe for how to achieve it. Usually it's, it requires very special consideration paid to what environment carbon is going to appear in and whether it's going to receive, let's say like support from the community and the blockchain that it's deployed on. So a good example is like Coty, where carbon was received very well, and the community is interested in using it. And there's I think a community coin called Pengu, which is where carbon is kind of its home on the Coty blockchain and things like this. So that's like it's an example, I think, of the warm sort of welcome and reception that you want with a successful deployment. Whereas people sometimes still ask me about like when Arbitrum, and there's just no reason to expect that it would be received, with that same sort of, let's say, advantage that we get on some of these other environments. And this is because Arbitrum is already a deeply entrenched ecosystem, and the clicks are already kind of set up. And so you don't really want to sort of be the new kid at school, trying to try and get in with the cool group or something like that on a chain like Arbitrum, because the immensity of the political momentum that these projects have can be very difficult to overcome. So yeah, it's not just about choosing a popular blockchain and going there. You really need to have a really good reason to be there. So yeah, growth and scaling is always something that I'm interested in doing. It's just it's not something you can just kind of cross your fingers and wish for, but it's also not something that you can kind of directly address by doing one thing or the other. It's you need kind of the right combination of situation, right? So to being in the right place at the right time, talking to the right people, and the ability to execute things very quickly. So I think TAC is a really good example of that. So not just having the right business connections, but then also being able to very, very quickly deliver on what it says, like what we said we would do. Not just things like the supporting the rewards campaigns and so on, and the deployment itself, but also things like mini app development and that kind of thing. Like it's always work, but these things are always done to scale volume and increase fees. It's the only reason we do anything, really.
I was just looking at the Doom while I was listening to you. I'm actually curious because this question is great, right? And it's wonderful that when Carbon DeFi was created, a business model was on your mind. It was few and far between at the time, and even still, that really actually have a legitimate business model. So, but the question is focused on Carbon DeFi. And so 2 points I want to make. One, I'm not sure that the AMMs really are generating all of, majority of the fees consistently. There may be days where they are, but I also think that there are days where Carbon DeFi outweighs that as well. But I want to bring attention to the ARB Fastlane, because earlier we were talking about, different products and things like that. The ARB Fastlane, Carbon DeFi is not the only one that is out there and actually generating fees for the protocol. So I was looking, we were speaking about TAC just now. I was curious about what the fees were earned on TAC, like for Carbon DeFi versus the ARB Fastlane. Either way, the point that I want to make is it's not just Carbon DeFi. And that was kind of one of the points that I wanted to make on this call in general, was that there's a bigger picture, right? It's not one or the other or the other. It's all of them collectively. Okay. Let's see. Okay, so we talked about 12 to 24 months, right? Kind of Bancor's role changing, how you see that, or evolving, I should say. This one is Carbon DeFi specifically. 3 years of Carbon DeFi behind us now. What's the aim for the next 3 years? What are you dreaming about?
Yeah, so I think that the approach that we've had over the last 2 years has been, it's constantly being refined. I think we're getting much better at this, right? It's not something that you can decide to switch to very quickly and be immediately, an aficionado at it. It's taken some time. But I'd say, yeah, for the next 3 years, in terms of the overall approach, I think is going to remain more or less the same, but the success rate will continue to increase. Having said that, on the product side, there are changes that I want to make. I've told some people in the LP chat, and maybe that was a mistake earlier this year, that I am working on a new model that is like a further abstraction, a further generalization of the kinds of things that Carbon does. And that I am preparing a new sort of invention disclosure for this, and that's been getting, very long. And, I'm taking my time to do this one, right, because I think, when I designed Carbon, it wasn't in a rush necessarily, but it was something that, in retrospect, there are things that I wish I had written down more carefully and described differently and that sort of thing. And so this time, I'm really making sure that I get all of the mathematical proofs really nailed down, address all of the edge cases and this kind of thing. And so I think that, yeah, with respect to what I said before, right, that the overall approach is going to be unchanging, but I think more effective. It will then also be sort of further boosted by a pretty compelling change in the actual product itself, that I think is going to make it more appealing and more relevant, especially as the rest of DeFi becomes more institutionalized and more sophisticated. So, yeah. In terms of what I'm dreaming about, I'm not sure that I have a good answer for that. But this is what I am anticipating is going to happen, and these are my plans for being the most ready we can for those kinds of shifts.
I just want to really quickly say how much I appreciate this approach to what it is that Bancor is doing. I made a clip recently of a call that we had done previously, and you were talking about, being the flavor of the month, right? How this isn't the focus for Bancor. It's not the hype cycle. It's not the flavor of the month. Like building for something that actually has this real substantial value, right? And I think with this technology that Bancor has consistently been creating since 2016 and continuing to do so, and seeing this more institutional and seeing the lack of retail, like I personally really, really appreciate this approach. And when the community members ask me what am I so excited about, I think it's Bancor's willingness to accept reality, right? Like you kind of see this for what it is, or you can piece this together to see a little bit of where the industry might be going and build for that, without forgetting where we are currently right now. So I just want to say that I appreciate that, and that's a question that I get from community members often, and that's probably my most consistent answer, is the fact that we don't, Bancor's not pretending, right? I appreciate that. Okay, Mark, do you think it's possible or a good idea to get into the Solana ecosystem with a DEX?
No.
Okay, do you want to elaborate or just no? We see a lot of activity on Solana. I actually saw a post recently that activity has really died down on Solana recently.
Yeah, I mean, it's not about the activity dying down or not dying down. The
Users were leaving, is what I saw.
Yeah, Solana is as with all of the like very old blockchains, it's like highly politicized, and there's I think there's a requirement to be invited. I think it's naive to be launching into the Solana ecosystem without being told that you should. The other thing is that it's a different programming paradigm. So and that's not, it's not to say that the different programming paradigm is bad. I think in many ways the decision to go with Rust was very well informed, but it does mean that you have to maintain two different code bases in two different languages all the time now. So staying EVM means that you get to keep the amount of code that you have to maintain relatively small, and be reminded that auditing is already very expensive, but in Rust it's doubly so. So it's there's a lot of reasons why I'm not really interested in doing it. Having said that, there are Solana also has kind of a layer 2 ecosystem happening. Like I think Neon, I can't remember the exact name, which I apologize for. So it's getting late. But there is a on top of Solana that is EVM, and that I think we do have an interest in being there. But yeah, I think in general, whenever a chain is as entrenched and as developed as things like Solana are, and things like even Ethereum to some extent, becomes very challenging for people that haven't been there the whole time to arrive with any significance. It's like showing up to a board game
Party
where
uninvited.
not party uninvited. I mean, yes, that as well, but I mean that showing up to a board game there, your opponents have been playing for a few days already, and you're just getting started. It can be an uphill battle of your life, and if you don't have to make that concession, right, then there are things where your risk profile would suggest is a much better decision, for example.
I don't think a lot of people realize how like the politics involved behind the scenes, right? Kind of in every industry. I don't think that ours is any different. And
Yeah,
the cost involved,
go
ahead.
It's one of the great lies about blockchains, right, is that they're decentralized. There are very, very few like large political players that control pretty much everything.
Right. It's amazing what you like discover once you're go from community members to like behind the scenes a little bit,
Yeah. Decentralization is it's the costume that blockchains wear, because it's more I think more appealing to the crowd that showed up to embrace blockchains and cryptocurrency in the beginning. But yeah, the people wearing those costumes are the same people that you would recognize from outside of blockchain.
It's amazing. For a trustless system, we have trust in everything everybody tells us, Okay. Are you going to continue with the Vortex system, through which BNT has gone from 250 million tokens to 112 million tokens?
Yes. I mean, that's not really my decision, right? This was I had a lot to do with, let's say,
writing the proposals.
Making the case to the DAO that I think that this is, the most fiscally responsible thing the project can do. That it's going to be hard, but I do think the DAO that approved $250 million in rewards should not have to shoulder the responsibility of absorbing all of that inflation. And we're getting pretty close, you know, like I can't remember exactly where
Was
the
it
VNT supply
80
was,
maybe?
something like
I don't
that.
know
Well,
why
I
that's
think
ringing a bell,
I
but
think we're I think that, you know, the Dow has reversed about 94% of the inflation at this point, which is pretty good. Um, and yeah, I think staying the course is the only thing that really makes sense.
yeah. Okay. Let's see. You spoke a little bit earlier about this, but I want to put it up here anyway. This was something that was just submitted yesterday, actually. If you have anything you want to add to this, we didn't speak about the, geo blocking and things specifically. I don't know if you can speak to that specifically, but obviously here the question is, what are the roadblocks to U.S. readoption?
Yeah, I understand. Removing the geo-block is obviously that, you know, Bancor is not alone in that struggle. I think I was recently on a call with the coded community where we were discussing the same thing, and I, you know, was able to
I think they
offer.
just lifted theirs.
They just looked at this, yeah.
Mm-hmm.
But I was able to offer the perspective, right? That it's not like you can just do this and there won't be consequences, and you need to have you know, the right memos in place and this kind of thing. Like, it's a complex decision. And yeah, it's something that I want to do. There's you know, there's some inertia at an organization level that makes these kinds of processes a little bit slow. But you know,
Mark, it
I'm
was
doing
something
my
you
doing my
said.
best.
Sorry, you're doing your best, and we appreciate that. Thank you. There's something you said on a recent call. I think it might have even been the Aureus call, possibly, where you were saying that we see them, we see different projects and things that are opening back up to the U.S. and everybody thinks, okay, well they did it, they did it, they did it. Why aren't you doing it? But really, there's a whole lot going on behind the scenes where some of these are, I don't want to say being investigated. I don't want to say something like that, right? Like, what is the proper word? Do you recall this conversation that we were having? I don't want to put words in your mouth, but I want to.
I don't remember the conversation exactly, but yeah, I have, you know, I have been on phone calls where I've said such and such did this, like, why can't we? Or, you know, like, how much of an obstacle is this really? And you get different information depending on who you're talking to. But one of the things that I constantly get reminded is that in some of these cases, they have concluded that they will lose less money lifting the geo block and then getting sued. Like, they're planning to get sued. But they conclude that the revenues that they can generate between those two things is greater than the amount that they'll be sued for. So it's a gambit, right? It's basically how much you're going to have to pay in fines versus how much money you can make in that interim. And this is common for businesses to do. So, for example, during COVID, one of the biggest airlines in the world, and certainly in Australia, Qantas, illegally fired something like 15,000 employees or something like that. And it's like it was very, very illegal. Like, they broke all kinds of, better business laws and so on. And they were fined, I think, $50 million or something like that by the Australian government. But in the process, they made $500 million. So they were all high-fiving each other, right? Because paying $50 million and saving 450 in the process doesn't seem like that big of a deal, right? This is what is sometimes called the regulatory arbitrage. And I think that for some of the projects in cryptocurrency, things like geo-blocking or not having a geo-block is being seen through that same lens, right? They're basically looking at how much is it going to cost them in legal, in, let's say, a moderate scenario. I don't think many people have considered the worst case scenario. And then how much better they think that that's going to be for their business in the interim. I'm not interested in making those kinds of gambits.
Awesome. Okay. Thank you. And thank you for the explanation too. Not just, the quick version, the actual explanation for it. Okay. Moderation is a huge part of keeping the community strong. Does Bancorp plan to expand the number of moderators in Telegram, Discord as activity picks up? I think moderators are there to moderate. I think the community is what keeps the community strong. So, I mean, I sit there in all of our channels and I'm like it and repost it, and you can call me a moderator, right? I don't know if I'm there to keep the community strong or if I'm there to encourage the community to actually get out there and support outside of our Telegram groups. So I kind of want to stop this question. I don't think moderation isn't important. I do, but I think the community that we have needs to, I would want the community that we have to realize what a huge part they play in keeping the community strong and growing the community versus putting it on a moderator, if that makes sense. Does Bancorp plan to expand the number of moderators in Telegram, Discord as activity picks up? I would love to see the activity pick up. I think we have a Mazix. Go ahead, Mark. You want to answer and then I'll go? Sorry.
Yeah, I mean, we use Mazix as a moderation service, and I think that they are phenomenally good. And I think that, they will scale with the community. I have no doubt. If the community 10x's in size, we'll just talk to a Mazix, and I'm sure that they can, that their moderation level will grow to meet that demand. I have every confidence in them.
I mean, Amazix has been with Bancorp since the get-go.
Very beginning.
Right? So,
very beginning.
Yeah. So, I mean, Amazix is perfectly qualified, to be there when the community is at its strongest, right? And I hope we get there again. We see that again, and we give them that challenge once more. But I really just want to take this opportunity quickly, because this is the community call, to voice my appreciation for everybody who has gotten out there and has shown their support, whether it's in the Telegram groups or on X or in Discord or wherever it happens to be. Because I don't think they realize, Mark, you know this. I was approached by a project who wanted me to potentially manage communities. And I told you I was going to do this interview. I was really curious, like, what exactly is this? What do you mean, right? Like, strong communities are for sale. And we have a community of so many people that are just so quiet. Like, I want to see you guys. I want to hear you guys. I want you to voice, your support like you do in DMs with me. Okay, next one. What's the best process for someone to put themselves forward if they'd like to contribute?
Yeah, it's not really gate kept. In that sense of decentralization, people can still contribute stuff. Remember that we're kind of speaking from that 2020 sort of paradigm where it was more common. But you can just, work on stuff, propose stuff, even at smart contract level. If you've got code that you want to submit, just submit it. I think that, there's a definite line between, the hiring practices for Bancorp and what would be considered sort of decentralized contribution. And, I have been on both sides of that line. In the beginning, I don't think, no one knew who I was, and I was participating and contributing on my own time. And then slowly, I maybe not so slowly, but rather abruptly made the switch from being an organic synthetic chemist to being, a researcher for Bancorp. But it wasn't, I didn't do what I was doing with the expectation of becoming a paid contributor.
Same.
And I think that's, it's one of the things that makes Bancorp, I think, very unique, right? You and Glenn, myself, You know,
We were just
Tiago.
contributors who were, I mean, we were community members who were enthusiastic about the project.
Yeah.
Yeah.
You know,
And wanted to
and
be involved.
Yeah, I wanted to be involved. But yeah, I think that there's you know, and Zeno, who does the YouTube videos as well. I just want to make sure I didn't leave anyone out. But there was, you know, there is, I think, a strong, or there was a strong culture of community contribution once, not just in Bangkok, but across, I think, every
It's so
every
true. It's
project.
across every project. Mark, I cannot tell you the number of messages I get where if you want to contribute, contribute. If you want to get paid first to show that you are capable of contributing, you first need to show that you actually know what the product is, right? That this isn't just another sort of flyby, because we can get a KOL, we can get somebody else if we really want to. It's never really been the Bancor style, you know. But if you've just joined the Telegram group, you just started following Carbon DeFi that morning on X, or Bancor that morning on X, and you want to send me a generic message saying that, you know, you love what we're building, and please, you know, dear insert name, like it, I want to contribute and I'll do great. And just talk, get in the groups, show that you actually like know what the product is, that you have some enthusiasm, that you want to support, you aren't afraid to support. And I think when those positions are available, or Bancor is looking for more contributors, you'll probably be at the top of the list, right? Versus the ones who are like cold calling me in DMs. That's my personal.
That is, yeah, I think if I wanted to add to that is that I think that there's a difference, you know, between contribution for its own sake and let's say, you know, people that are looking for employment.
100%.
And the distinction, I think, is clear just from the words that I've chosen to describe it. But yeah, there is no gatekeeping. And yeah, for Bangkok and across the entire industry, there used to be a lot more contribution, right? The same way that people contribute to, and you know, this is coming back to things like open source. You know, this idea that an open source project can be run and sustained by people who are exclusively volunteering, and that is true in some cases. You know, there are very successful open source projects that run that way. And so, you know, if you are an open source maximalist and you want to create software or features or a front end or something like that, there's really nothing stopping you. You know, Bangkok will allow you to, you know, to borrow its name and so on. Just talk to us first so that we know that you're not a scammer or whatever. But that you can develop software and contribute anonymously if you want to. Not a big deal. It doesn't guarantee employment. And you know, if you only want employment, then there is a process for that where, you know, there are hiring cycles and we have interviews and so on. So I think that, you know, it really depends on this word contribute.
Right.
If you mean to the, you know, in the same sense, if you'll contribute to an open source project, then there's nothing stopping you already. But if you mean that, you know, you want a career with Bangkok, then I think that's a different discussion.
Yeah. Okay, that was all of the questions we had previously submitted. There is one that I want to add, and then really, okay, so Christopher Conforti, thank you for all of your comments and, you know, everything throughout the call. How does licensing work for Bangkok with the DAO? This was while we were discussing, obviously, Aureus and some licensing, but I wanted to wait to address any additional questions that we were getting. So I don't know if you're able to speak on this, or if this is more, you know, you want me to?
No, I can see that. No, I mean the setup for Bangkok's DAO is really to govern the
Bangkok deployments.
Yeah, Bangkok deployments, exactly. So there'll be certain decisions like on you know, what the markup is with respect to maker prices and that kind of thing, which influences the BNT buyback and burn mechanism via the vortex.
Maker or taker?
You mark up on the maker price. The taker never really knows the difference. Like if you go and buy a dozen eggs from Walmart or whatever, Albertsons, how much did Albertsons pay for them?
Okay, I just want to clarify because we don't have a maker fee, so I don't want any of the listeners.
No, I didn't
there
say maker fee. I said the markup on the
markup
maker's price.
fee. Okay, fine, deal. Fair.
So these are all things that there is a DAO for, and when there are changes to the protocol, it's required that the DAO sign off on those things. But the DAO doesn't have a legal entity. There is no, like, the DAO is effectively a voting mechanism, which protects it, right, from a lot of stuff, because it's very difficult to take a voting mechanism, to court. Although people are trying that, all over the industry all the time. But yeah, there is no entity, legal or otherwise, that represents the DAO. And so for licensing and things, this comes back to Benko's parent organizations, which do have legal entities and bank accounts and everything else,
right?
And and IP and other things that it can do to legally and enforceably, interact in and agree to business transactions of all kinds. So the DAO doesn't really have a place in those processes.
Cool. Okay. I really just want to, what people don't know is that Market makes the second markets for PS5s on eBay. Sorry, you've been exposed now. Okay. Really just some of our community members who were in the chat during the call. I just want to thank you guys for participating, for tuning in, for submitting all of your questions. I see Lasai and Imagining Tech and Christopher Conforti. We shared yours earlier. Let's see, we had Jose in here. Let's see if I can find Jose. Okay, I thought this was a beautiful comment. So thank you, Jose Luis, for yours as well. Haste wanted to thank us also. So thank you guys, everybody, for tuning in. Thank you for submitting all of your questions. I do hope, and it seems that you did, get value out of this. And if you want to do this again, please let me know. My DMs are always open. Mark, thank you for taking the time to do this with me for the community. I appreciate you, and I know that the community does as well. So thank you.
You're very welcome.
Okay, guys, we will see you next time then. Let me know if you have any questions, and I will get them to Mark or answer them to the best of my abilities. We'll see you all soon in the chats.